Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday, the 23rd of February, 2025. And yesterday we published our regular weekly update. This video is basically a repeat of that update. But we asked the question, particularly towards the end. Will gold hit $3,000 this coming week? Or perhaps the week after? What effects will both the economy and geopolitics have on that outcome? Well, to find out, let's take a look. Now, before we look at the figures, we'd appreciate it if you would at least give this video a thumbs up, and failing that, at least subscribe to the channel if you haven't already done so. Not forgetting to press that all-important bell sign so that you're notified of our videos as and when they're published. Now, gold rose $54 last week, rising from $2,883 to $2,937, having hit a high of $2,955 and a low of $2,880, a rise of 1.9%. Gold spread between high and low was $75. Last week, we predicted that gold would trade between $2,820 and $2,950, which it did, save for a brief moment when it went $5 higher. In sterling terms, gold rose £35, closing at £2,327. And in euros, gold rose €66, closing at €2,816. Silver rose 37 cents, rising from $32.17 to $32.54, having hit a high of $33.72 and a low of $31.97, a rise of 1.2%. The difference between its high and low was $1.75. Last week, we predicted silver would trade between $31 and $33.75, which it did, and closed at just above the midway point. In sterling terms, silver rose 18 pence, closing at £25.82, and in euros, it closed at 31.16 euros. That's up 0.47 euros. Gold to silver ratio moves back into the 90 territory, rising from 89.6 to 1 to 90.3 to 1. Bitcoin is currently standing at $96,500, down $1,000 on the week, but we all know that's nothing for Bitcoin. Equities were lower, however. Dow Jones down 1,118 points at 43,428, with the largest fall being on Friday. The S&P 500 down 101 points at 6,013, and the Nasdaq Composite down 502 points at 19,524. Even the UK FTSE was down 73 points at 8,659. A little bit of good news as far as oils are concerned, though not significant. Brent crude down 31 cents a barrel at 74.43, and WTI crude down 34 cents a barrel at $70.40. Dollar index down a minuscule amount by 0.1, and that closes at 106.61. Now, in our last report, we stated, quote, "This coming week, watch out for Wednesday for the FOMC minutes and flash PMIs on Friday. Also on Friday, we have the consumer sentiment figures for February." Well, as we predicted some time ago, the Fed expressed worries about inflation sparked by Trump's tariffs and economic plans, which could slow progress on getting inflation back to 2%. The Fed staff noted in the report, quote, "Elevated uncertainty regarding the scope, timing, and potential economic effects of possible changes to trade, immigration, fiscal, and regulatory policies," unquote. There was disagreement over how much scope there is for more cuts, as a few, not many, but a few Fed officials didn't see much more room for cuts and believed the target range of interest rates was already close to neutral. That's not good news necessarily for gold. Flash services PMI were down in February by 3.2 points and services down by 0.2. And the consumer sentiment index was also down from 67.8 to 64.7. Now, this coming week we have more substantive data, but particularly on Friday, because on Tuesday we have consumer confidence figures, and on Wednesday new home sales, Thursday durable goods, but the most important day of the week, Friday, which is where we have the PCE index or inflation index for January. Year-over-year figure was 2.6 and expectations were and are a fall to 2.4. We think this is unlikely. And the core year-over-year was 2.8 with expectations of a fall to 2.6. Again, we believe this to be unlikely. We are expecting either a smaller reduction or possibly no change at all, and would not be shocked if the rate was slightly higher. We've got to wait till Friday to find out. Now, our narrative last week was, quote, so we have an interesting mix of trade war fears and their potential impact on inflation, with the reciprocal tariffs sparking uncertainty. Well, this narrative holds again for this week. Gold struggled to get past $2,955 last week and fell back, though not decisively. Some analysts are stating that the bullish breakout has stalled, with bearish risks increasing. We don't necessarily disagree, because a headwind against gold is that the inflation rate not diminishes means that rates have to remain at current levels for longer. However, with equity markets falling and gold being a hedge against inflation, this could potentially underpin the price. Technical analysts are predicting that a bullish trend will continue if gold surpasses 2,955 and a bearish trend starts if it falls below 2,917. We are a little more concerned about silver. If tariffs are strong and pervasive, then global trade will diminish, and this could have a detrimental effect, especially short-term, on silver prices. We saw silver pull back on Friday, but the 32.35 level is regarded by analysts as being important, 32 as strong support, and $31 as crucial support, below which silver may fall into a strong bearish trend, should that level be broken. We're of the opinion that the $3,000 level is crucial for gold, and traders may still have an eye on attempting to achieve that target. The inflation figures next Friday will indeed provide some guidance as to the direction of precious metals in March. That said, geopolitical events are probably having a more important impact, as sentiment is just as important in trading as well as the underlying data, at least short term. With this in mind, we forecast gold will trade between $2,850 and $2,975, with 2,825 and 3,000 as outliers. Silver we expect to trade between $31.50 and $33.75, with 31 to 34 as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you would give this video a thumbs up, subscribe and press the bell sign. Pop on over to our sister channel, Finances Do Matter, and subscribe there. There is a lot to come. We're well behind on that channel, but it will happen, so do subscribe. And all that remains is for us to wish you an enjoyable, what remains of your weekend, and a prosperous week ahead.